Hi guys, Harry here, back again with another video. So today I wanted to do a video on technical analysis. So the reason I wanted to do this is because many of the investing content you see online is all to do with fundamentals. Now this channel we're more interested in high time frame investing, right? So I wanted to speak about technical analysis and basically I want you to decide if this is something you can use when you look to invest or look to make those decisions. So we've got Peter Brandt and Paul Tudor Jones, who are two of the top technical analysis investors right now. So I've got a quote here from Marty Schwartz. So he was someone who used fundamentals for years, never really got anywhere with it, stuck with trading or investing, and made it as a technical analysis or a technician, as they call it. So yeah, just goes to show if you're not having too much, luck with fundamentals, this might be something to use. So what is it? So technical analysis is a method of evaluating financial assets by studying historic price and volume data to forecast future price movements. The core idea is that all the relevant information is already reflected in the price. So by analysing price patterns and market behaviour, investors can identify trends and make informed decisions. Essentially, you have the chart, everything else doesn't matter. So things like the news become redundant, which I think is really nice. So investors who have had success using TA, we mentioned Paul Tudor Jones and Peter Brandt earlier, but here are some people from the Market Wizards books who had some good success. If you've not read the Market Wizards books, I'd definitely give them a read. They're really good insight. They're like interview style. It's an interview style book, so they basically interview like top traders and investors, and yeah, really good, like some really good bits of knowledge in there, and they're timeless. So I think the first ones were in the 1980s or 90s, and yeah, there's so many good bits of information there. It's great. So definitely check that out. Why I like it, it's completely objective. If I put two charts next to each other, you can't tell what they are. You take the names away, a chart's a chart, right? Takes away my own opinion. I don't think I'm smart enough for fundamentals. That's not necessarily true, but fundamentals, it's not something I would have wanted to stuck with, and you can't apply valuation really to gold. I mean, you could do like a liquidity evaluation, but typical company evaluation, you can't do that to gold. And in terms of it's a repeatable strategy. It's a repeatable strategy you can use again and again. Buy above the 200-day moving average, you are cash below. It's very simple. So you can make it as simple as possible, which is one of the reasons why I'm surprised you don't see more people on podcasts talking about it. But, people on podcasts, all it is buy index funds and Warren Buffett. That's all you hear, whereas this is definitely a strategy people can use to manage their money. Some of its drawbacks is there's so much information out there which does lead to copying strategies and, this works, 5 trades, you lose 5, on to the next. You keep jumping, you keep changing, and you can just copy someone. You can see someone on Instagram, he's making 50 grand a month, I'm just going to watch this. It doesn't work like that. It does not work like that. So there's too much information sometimes, and we'll get onto kind of bits of how to manage that. But yeah, you can also just jump from strategy to strategy as well. It can be awful in some market conditions. A trending system won't work in a ranging market, and a ranging system won't work in a trending market, right? Pretty simple. Thinking it works 100% of the time, again, people will build something, they'll maybe back test it, they'll go through everything. This is going to make me loads of money. 2 months in, why aren't I making any money? They'll get into that mindset. Needing to actively manage it. So I'm assuming there are a lot of people watching this, they'll be thinking, I've tried trading, it didn't work for me. Well, what were you doing? The 5 minute. Well, if you're working a full-time job, if you're like a manager at a company or a vice president, a director, whatever it is, and you're managing a team and you're managing an office, or you're just working your job, you don't want to be checking your phone every 5 minutes, right? It's something that's completely irrelevant. So it's not something you want to be doing, right? So you want to find something that you can manage in your own time and around your life. You don't want it to be a burden, right? And you can get edge decay. So something could work and then it becomes less redundant as time goes on. Why I hate patterns. So yeah, I'm not a huge fan of patterns, mainly because if I'm drawing a trend line, I'll be thinking, but there's 3 trend lines. Or if I'm drawing a head and shoulders, I'll be like, but there was one there, but there was also one there, right? So I don't like having opinions. If it can be very hard to define, and they're very retail friendly. We are retail traders. Everyone is retail unless you are in an institution. Let's get it right. But they're very easy for people to think, oh, bull flag, this will work. Oh, it doesn't work. For me, I think the best people create their edge, and they create that over the long period of time at their way of, and it doesn't have to be a technical analysis edge. It can be your edge is you earn loads of money in your day job and you just buy, stocks long term. That's it. And that's all you're doing. That will beat most people. People who have an edge and they apply it over the long run, and that can be just buying the market, because I believe an edge is what works for the individual applying it. Yes, you want to outperform the market, you want to do this, you want to make all this money, but that's really what you want to be doing. And I think these aren't as good. I mean, you see people on Twitter doing them, the retail friendly. It's just not for me. What indicators I like? I love moving average and pivot points, mainly because you press them and they're on. Bang, you don't have to do any calculations. It's not divergences. It's, okay, the moving averages are bullish, or the moving average is, below price. Okay, cool, I'll be interested. Pivot points. I've spoken about this in another video. If you close above R1, okay, cool, we could be trending it. If we're above the pivot, okay, cool, we could be bullish. We close the month below the pivot. Okay, I'm not expecting much next month, right? These are things I personally like just because it's black and white. But ultimately, you want to just find 2 to 3 things that works for you. An inch wide and a mile deep. You want to get a couple things and just really master them. That's really the way you're going to really develop an edge and something that works for you. Some people use no indicators, right? So there's Dow theory, there's Wyckoff structures, there's market structure breaks, there's breaks of structure, right? I've only really done market structure breaks. For me, Wyckoff was quite hard to actually make actionable. Like, you can look at a chart, oh, there's a Wyckoff structure forming, it's a distribution, it's an accumulation, whatever. But for me, I found that quite hard to actually make actionable. I want something like, these 2 things happen, I buy, these 2 things happen, I sell. Wyckoff was a bit, bloody hell, how do I get my head around this? So they went for me, but market structure breaks and breaks of structure can be a bit more simpler. Ultimately, you need to find what works for you. This is all about developing something which you can manage, around your current schedule, and you can easily apply, and it works for you. So that's the main takeaway really with technical analysis. Hopefully after this video you'll think, okay, cool, maybe I could add technical analysis into my high time frame investing. So yeah, thank you very much for watching. Please like, comment, subscribe, and yeah, I'll see you in the next one.